This is our Forex blog for July 19th, 2012, and part of our three-step Forex trading system is using our currency meter. We are looking to buy the strongest currencies versus the weak and sell the weakest versus the strong. You put on a quote sheet, you can sort these, and it will automatically put the strongest ones on top, the pound, the Australian, the New Zealand earlier today, very strong pairs, the Swiss, the Euro, and the longer term daily, weekly, monthly trend on the dollar is the weakest. And earlier today, the dollar had a lot of weakness for 3.5 hours here. One of the currencies, actually from 5 to 8:30, one of the stronger pairs earlier today at the time would have been the Australian and the New Zealand, as you can see. So those are great ones earlier from 5:30 to 8:30, be focusing on buying. So step one is finding and being in the right currencies. The more time frames that are up or down, you can see the dollar, the real-time trends down, the 15-minute, hourly, daily, weekly, monthly trends all down. And when you see that, especially when you see an hour to hour and a half of weakness, followed by half an hour, 20, 30 minutes of very little strength, that time frame previous momentum to the downside is very likely to continue. It's even more likely to continue, probably 20% more likely, if all the time frames are down. The Australian, all the time frames are up. The New Zealand, all the time frames are up. This is as much of a no-brainer as it possibly will ever get. When you spot these patterns, these are the days that you can just load the boat and make a week's worth of profit in one day most of the time. So let's bring up the Australian dollar. 5:30 to 8:30. You can see this little pullback right here, the buy signal, and it went up from about 0400. You'd be buying this when it broke out right here. If you got out when the trailing stop got hit, you made about 25 pips on that. And then it pulled back and kind of went sideways. You might have had a small loss, small break even, 5 pip win, 5 pip loss. It's hard to even say. But you can see later on went up. This pullback buy signal right here also went up. The New Zealand was also very strong. Earlier today, I'm going to hit the minus key to zoom back out. Buy signal right here went up. And it went up right to my Fibonacci profit target level. Not many new traders even understand how to use fibs right. It's more of an art than a science. I've been using them since 1999 and took DiNapoli's $3,000 course, read his book. I like his way of trading fibs, and that's what I teach, and that's how I draw my fibs. I use longer time frame moves, and these Fibonacci profit targets in dark gray are where I expect the maximum high to be. And when these levels are outside of our bands, or inner outside of them, it's even more likely to reverse. These white band, probably 70% of the time, 75% of the time, is the maximum move up. So you can see it went up. There's a lot of strength. It's going sideways right here. The momentum died down. It's very likely to reverse, pull back eventually to the hourly moving average, which is about 30 pips down. So you can do a counter trend trade up there if you want. Typically, I will wait if a currency has hit a major resistance like that. I'll wait for a two-wave pullback or a pullback to the hourly. You can see a buy signal right here, and it went up about another 20 pips. A lot of times when currencies have gone up a couple days in a row, there's less explosiveness to those trends. The pound was very strong from 8 o'clock until now, and the euro is very weak. The dollar, unfortunately, during that time was relatively strong, so you wouldn't want to be trading the pound versus the dollar. But let's look at selling the weak euro versus the pound. Let me just put the euro pound on here. Weak euro, strong pound is what you want to be looking to sell. And you can see just collapsed. And this also shows one of our faster digital signal processing based moving averages. And it's very fast, and you can pretty much use it. A lot of times price chops up around it, especially when it's going sideways. I've found, and I've been trading, when it breaks down underneath there, goes back up, breaks down underneath there, goes short when it goes 1 pip underneath that low, and you can see it found that trade here. Or you could wait for it to break this low, get in, and you can use it also as a trailing stop because it's so fast. You can see it on the previous day here, up, down, kept you in that move all the way down here, extremely fast, and it's a scalper's dream. used to be a 100% scalper. Now I'm probably 30 to 40% scalper, and I try to hold trades for 30 minutes to an hour and a half when I can. But this is a scalper and intermediate trader's dream. We're going to be releasing it in the next week or two. I'm also going to be creating a MACD using this. MACD is faster than two moving averages crossing, because it takes the difference between two moving averages, and then it takes a moving average of the difference between two moving averages, and when the difference from one moving average to another crosses that signal line, it gives entries, and it's typically 3 to 8 bars earlier than just the moving averages crossing themselves. This thing is so ridiculously fast that I think it's going to be even better with a MACD. It might even give you a buy signal, right here on this bar, or this one right here. Sell signal, very likely, right here when it's going sideways like that. So let's take a look at what else you could have traded the super strong pound against. The Swiss, very, very weak, just like the euro. Now the Swiss is obviously pegged to the euro. If you ever bring up a euro-Swiss chart, you'll see, it goes sideways. It doesn't move. When the euro goes up, it goes up. When the euro goes down, it goes down. So you can also trade the pound against the Swiss. Pound Swiss, you want to be looking to buy this. Now, especially after 8 o'clock, you can see if you missed the first move, it pulled back. And this is one of those things where I said where if it goes up, comes back down, goes up again, breaks out through the high, you get in. Notice how wonderful this is as a trailing stop. Our chandelier stop actually made more in this instance because it's a little bit slower in moving up. It's a wider trailing stop. And when you're in a currency that's this strong, you would have been in this at the breakout here around 53.50 and out up here at 54.02. You made 50 pips on that trade. While risking, you can see this is a 5 pips per bar chart. You're risking, you put your stop underneath the low, in a lot of cases underneath the previous bar's low by 1 or 2 pips plus the spread. Your stop on this is 10 pips. This is a trade that generated 5 times more profit than what you were risking. And that's the key to trading. Anytime you focus on the currencies that are most dynamic, most explosive, you're much more likely to catch these big wins. And by using range charts, you limit your losses to a super tiny amount. And once the market most of the time when you buy one currency that's strong versus another that's weak, the trade works, but sometimes it pops up and it comes down and stops you out. Once it starts moving up, you want to yank your stop up. You want to put it at break even as soon as possible. And a lot of times trades that don't work when you're using our currency meter, when they don't work, you might have 2, 3, 4, 5 pip loss or even a break even. So that can also help you minimize the average loss, of your trading during the week, and you want to maximize your average win. That's the whole mathematical formula behind trading. Small losses, bigger wins, and obviously everyone wants. It's human nature to want a high winning percentage. When a currency's gone too much, and you can see it came down underneath this line, went back above it, came back down again. You could do a counter trend trade up here at 54.03. And then as soon as it kind of runs out of steam right here, maybe get out right here, catch 15 pips on a quick counter trend. Using, I don't like to teach counter trend because it's a very good skill to learn, but in the hands of new traders who don't know what they're doing, they don't know how to read support resistance Fibonacci's, how to use our containment bands, how to use our FX trend reversals, how to use our range projection. There's a lot of tools we have that do a very good job of nailing a lot of times to the pip when a trend's over. However, in the wrong hands, for instance, in this case, you drew your fibs off the previous swing, more than likely it did a pretty good job of letting you know when the trend was over. Look, to the pip. Now when you see that, and you can see the very fast moving average up here, it's kind of going sideways, breaks down. It's a very high probability trade. This thing's gone up very far. It's very likely to pull back at least 38% of this last wave right here, which it did. Good profit target. And it's enough of it's enough number of pips away. It's probably 2.5 times bigger potential profit than what your risk is. And that's the key. Is this trade likely to work? Yes, even though the trend's up. I wouldn't expect it to pull back more than 20, 30 pips being this strong. However, when it's exhausted, no one is left to buy up here.